Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Massar and Tim Stenovec from Bloomberg Radio.
Now we want to get to the micro, and in particular, one name in the equity world that we are focusing on big time.
Yeah, Pfizer shares rallying right now, higher by 2.5% on a day when the rest of the market is lower. It's up the most in more than 5 months. The stock, we should note, though, just a little changed this year. According to a person familiar with the matter, activist investor Starboard Value has taken a stake of about $1 billion in Pfizer, and it's seeking to spur a turnaround of the pharma giant. This is according to a person, Carol, familiar with the matter.
All right, so let's get to it. Let's get more because it does seem like COVID has certainly affected this company, and they're trying to figure out what's next for them. Bloomberg News health reporter Madison Muller back in our studio. Good to have you here. Pfizer, like one of the darlings, right? Mm-hmm. During COVID, did they really think that the COVID vaccine was going to be there, like keep them going and going for years to come? Like, is that what this is about?
I do think that a lot of people thought during the pandemic that there was going to be a longer tail to COVID. And Pfizer has certainly said that, like that the demand has declined a lot more rapidly for the vaccine and their treatment than they anticipated. But that being said, I mean, in the pharma world, CEOs are always looking to what's next. Like, that is not something that's new. That's the minute you have a blockbuster, we talk about Lilly all the time on the show. Like, they are already thinking about and looking at what's next. They are so not settled on obesity. They want to be prepared for the future. So that's something that all pharma CEOs should be and are talking about frequently. So to say that they didn't know that this was going to happen is kind of, naive.
But we should go back and understand how big of a boost to Pfizer's top and bottom lines the COVID vaccine was. Right. In your piece, you say that the vaccine and treatment more than doubled revenue to $100 billion in 2022 from $42 billion back in 2020.
Mm-hmm. That's
massive.
A boost. That's a boost.
Huge boost. Right. Huge boost. And, it's not like they haven't been trying to prepare for what's next. The CEO, Albert Bourla, has done a number of deals in recent years. They're trying to replenish their pipeline. But this is the problem, is that investors are not happy with the deals that they've done. So far, it has not replenished those revenues quickly enough. And they did this enormous Seagen deal last year, $43 billion. And that has given them a stable of good cancer drugs, potential blockbusters. However, again, it's not happening quickly enough. They are not reaping the rewards of that quickly enough and as fast as investors had hoped.
What do you think? I had a brother who worked in the pharmaceutical industry for a long time, and we always talked about this. He's like, listen, R&D, we spend a lot. This is why they charge a lot, because they put a lot of drugs out, and maybe one will be a blockbuster, but a lot of times they're not. You understand this world. So again, is it just this is the business and they're in a lull, or is there something a little bit more complicated going on at Pfizer?
Yeah. I think that that's one of the things that we're thinking Starboard's sort of like getting involved to figure out. Are these bad deals? Is it just bad luck? Like you said, bad luck in pharma is a huge part of it. We've talked about that again with Lilly. Like, they kind of ignored obesity for a number of years, thinking it wasn't going to be a big thing, and then it came back into style, so to speak, within pharma, and that just is kind of what happens. There's like these ebbs and flows of people not being interested in neuro, and then they are interested in neuro again, and then because there's like one breakthrough and one company that does really well and has a really successful drug, and then everyone else sort of rushes into it. So I guess it remains to be seen what's going to happen with Pfizer, and we're still trying to get more details about, what Starboard is looking at.
But they've got a former Pfizer CEO helping them, right?
Yes,
Which is kind of interesting to me, right?
Former Pfizer CEO and a former
Talk about knowing
CFO.
The inside, right? Yeah.
Mm-hmm.
What do you make of that, and how are you guys thinking about that?
These people know the business, obviously, and to have, it's interesting. We were looking at some of the other healthcare the things that Starboard has gotten involved in healthcare. So they got involved with Bristol Myers, they got involved with Magellan, Humana, and we were kind of like looking at their track record a little bit. And it could help having the former CEO, CFO of the company sort of on board, but we just don't know what capacity they would be serving in or involved in going forward.
I don't remember the last time you were on our program not talking about GLP-1s.
I know,
we're not gonna.
It's like wait, are we in an alternate universe?
Right. Seriously,
but we're not in an alternate universe because that's part of the Pfizer story.
It is, yeah.
It's a big part of the Pfizer story. When we talk about GLP-1s, we talk about products from companies like Novo Nordisk and Eli Lilly. What's the status of what Pfizer has been trying to develop when it comes to GLP-1s?
So Pfizer has been trying to develop a pill, and like we've talked about, that is likely to be the next big thing in obesity. But their efforts have not gone so well so far. They had one pill that they just had to discontinue entirely, another one twice daily pill. The rates of side effects were really high in trials, so they discontinued those trials, and now they're going forward with a once daily formulation. But the analysts that I've spoken to are like, we don't know if this is going to be a competitive product. I mean, they still need to see more data, but so far what they've seen is like there are so many other companies, like we know, that are developing pills for obesity now, and how does Pfizer stack up to those? I don't really know. But, Albert Bourla at one point was really talking up what the company was doing in obesity, and that was maybe one of the next prospects for it. And so far that hasn't gone according to plan.
So, I don't know. Do we know Starboard's end game here, or we don't? We're just kind of
that's
watching.
What we're still trying to figure out. If anyone knows, you're free to email me.
Because I'm curious, what's a turnaround look? I mean, do they have stuff to sell, or you know what I mean?
Yeah, right.
Is it just? I mean, they've sold off stuff.
Yeah, and it's interesting because they have this huge cancer business now. Yeah. And then they have all these other products, like they have vaccine, migraine drug. So that is one of the things also that we've heard, is that their like M&A strategy hasn't been super focused. It's like just kind of all over the place. And their big focus now is on cancer, but leading up to that Seagen purchase was just like a couple of other deals that sort of unclear.
Put the COVID shot just at the end of the interview back into perspective for us. Should investors think about this as like a footnote or any other sort of
I thought you were going to ask her, vaccine? Should I get a COVID shot?
No, I won't bore everybody with my questions about that.
The debate
I mean, it is the season. Flu shots, everyone's getting them now.
But how should investors think about that very briefly?
I mean, that's a good question. I think, I guess it's unclear. Like every season, the demand sort of, we thought maybe there would be more demand as we moved back to like seasonal in the fall. People don't have that maybe animosity towards like the COVID shots after having to get so many in a row. But the demand is not there. People are very wary, and I don't know. I think sick of getting all kinds of shots.
Or it's like if you get COVID, then I'm like, I'm going to go get COVID.
It takes 3 weeks for the shot to kick in.
I know.
Well, then you have immunity if you get exposed. So.
Madison, Muller, thank you so much. This is Bloomberg.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
That time, Carol.
For earnings.
It's also that time for
'tis the season.
Spooky decorations. I don't know if you saw this over the weekend where you live, Carol, but kind of everybody was out putting up the cobwebs.
Yes.
Accidentally dropping things off the roof if they were trying to like spread things out. That happened to my neighbors.
I'm always opening up like windows, and I'm like tucking in the cobweb and like quick slamming the window to like hold it. Yeah, it's a little crazy.
Okay.
It gets messy.
Spiders, webs, witches, pumpkins. Mm-hmm. And what about the skeletons?
Ginormous, I believe you have to say. Halloween skeletons. They're on front lawns. In the case of all of us who are in urban neighborhoods, they are on so many, in front of so many homes in my neighborhood. They're on the front stoops or like right next to them. Wall Street Journal's out with a great story, in fact, on how these are jangling the nerves of neighbors, causing homeowners associations to not leave them up past Halloween, basically. Apparently some leave them up, put a red cap on, carry them through Christmas.
Why not?
Top hat for,
like I said before,
New Year's.
Where are you going to store them? The giant skeletons, where are you going to keep them?
I know, they're giant. They're massive. All right, in all, some $11.6 billion will be spent on Halloween, according to the National Retail Federation. We wanted to take a dive into what's going on in retail.
Yeah, back with us for thoughts on the Halloween shopping season, also the upcoming retail season. Back with us is Katie Thomas. She's lead at the Kearney Consumer Institute. It's an internal think tank of global management consulting firm Kearney. They analyze consumer behavior. They do decision making to help businesses address consumer needs. She joins us once again from Pittsburgh, Pennsylvania. Before we talk about what's happening in the next few months, let's talk about the impact of these storms. Milton in Florida, people are preparing for this to hit in the coming days. I'm wondering, and especially people still over the last week and now cleaning up from Helene just in recent days, what effect is that going to have on the consumer outlook this season?
Yeah, I mean, I think you definitely see consumers responding. What tends to happen sometimes, Tim, with these big news stories is you see these little dips in spend as people are sort of drawn to their TV and they're just not thinking about, going out, doing some of that shopping. It tends to be more around the bigger purchases where the uncertainty is not driving spend. But one thing that's hard to say is really how much you'll see it across the country versus just small regional impacts. Because in general, we've found that Halloween decorating has provided actually some certainty in uncertain times. And a lot of consumers have embraced exactly what you're describing, the decor, the candy, some of the tradition around the holiday. But, you certainly see some of these natural disasters really weighing on consumers, especially those impacted.
In general, like prior to the storm, how are consumers feeling?
Right now in the U.S., you're seeing that continued sort of mismatch between how consumers say they're feeling and what the numbers actually say. So consumers still continue to voice to us that they're fairly stressed, but that stress has also stayed stable. We haven't seen it go up in stress. We've seen a little bit of an uptick in concerns around the cost of living, but for the most part, they're embracing where we are. And I think in particular, once we get through the election, we expect even more stability for the U.S. consumer, because that uncertainty that can restrict a little bit of spending will then go away.
Regardless of who wins the election?
Yeah, honestly, regardless, because it's just living in that waiting game. I mean, that's what we saw all through COVID, right? We were really dealing with the anxiety of consumers of not knowing what's going to happen next. So I actually anticipate a solid holiday season because people do like to spend at the holidays, and we'll be through some of that frustration and uncertainty that is distracting all of us right now. And that's another thing. Halloween is a welcome distraction from living as someone who lives in a swing state. I can't tell you how many texts I get in any given day. So I'll take all the skeletons I can get.
Yeah, it's interesting. Hey, do things like Amazon Prime Day kicking off tomorrow, 2 days, we were kind of
Amazon
joking.
Prime Days, Carol.
Prime Days.
Prime Days.
We were laughing in the newsroom a little bit, wait, do they do this twice a year now? I'm a little confused.
I think the one over the summer is multiple days as well.
Right?
So, yeah, I don't know if it's Prime Day anymore.
Does this really move the needle?
Well, this is really, what we're seeing is a kickoff to the holiday season. So this is another carryover, both with Halloween and with the winter holiday season that we've seen from the pandemic, which is longer seasons. So Halloween used to be a little bit more concentrated in the month of October. Now you're seeing Halloween decor go out in stores in August. People are decorating in September, really leaning into it. It's similarly this is a bit of a kickoff to the holiday season. Now, some people, if they're organized, start to pick up stuff now during these deal days, but we still hear from a lot of consumers that they're really not ready until it's a lot closer to the actual holidays.
Can I just tell you this Wall Street Journal story, which gets into these giant skeletons.
You're back on the giant skeletons?
I am. I'm obsessed. Ever since Lisa Mateo mentioned it on Surveillance this morning, I can't let go. Home Depot's 12-foot skelly has sold out every year since it clanked onto the Halloween decor scene in 2020. Retailer sells the $299 Skelly earlier and earlier with limited online sales this year starting in April. It limits how many shoppers can buy, allowing only one at a time to deter reselling. Again, this is in the Wall Street Journal. I mean, they just all of a sudden were nowhere and now they're everywhere. And I know in my neighborhood, like I said, we all have 12 feet maybe in front, a little bit, not much frontage, and they're there.
I kind of thought this was a pandemic thing.
Yeah.
And then it turns out
that... Did they come out in the pandemic?
Yeah, 2020.
Yeah. Oh, that's
they
right,
came
2020.
out, fall of 2020. And then, and that was sort of the consumer spending, right? Nobody was doing anything.
Right.
So they were buying stuff. They were buying couches. They were buying stuff for their homes. They were buying, 12-foot skeletons. But it's continued.
Yeah, which is kind of interesting. Well, and to that, I mean... I guess, what do you watch most? We know how important consumer spending is certainly to the U.S. economy. We've been focused on the job market, right? We just got a strong report. So when it comes to factors and things, you guys are a think tank, right? You analyze,
Yes.
You have clients, you have to advise on what consumers are doing. Is it the jobs market that you watch most closely? There's one factor that you watch, what is it?
Yeah, so I think you're right, Carol. But what I would say, so we're actually getting ready to launch the latest version of our consumer sentiment index. It's called the Consumer Stress Index. And what we watch is actually the consumer version of the job market, which is personal job security. So sometimes, as we know, with jobs, it's not always a perfect tie out to the jobs that are available and the people that are looking, and just in general, how safe people feel in their jobs. So we've seen a slight uptick in the last 6 months of people's personal job insecurity. So being a little bit more nervous. If I were to lose a job, it would be harder to find a new job. But it's also small. So I think that no red flags here yet, but something that's on the mind of consumers is that labor market. It's a little bit hard to read, I think, on an individual basis.
All right, we're going to leave it on that note. Listen, hey, thank you so much. So appreciate it. Katie Thomas, lead at the Kearney Consumer Institute, joining us from Pittsburgh, Pennsylvania.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Brent crude soared to $80 a barrel, its highest price going back to August. Mounting tensions in the Middle East, raising speculation, Carol, that Israel may attack Iran's oil infrastructure.
There's so many headlines, I've got to be honest with you, when it comes to energy. Tim and I
There's an entire page of headlines that you put in these notes.
No, it's just kind of crazy. From Chevron selling some Canadian oil sand and shale assets for about $6.5 billion. You also had BP abandoning a target to cut oil and gas output by 2030. That's from Reuters.
Saudi Arabia is preparing to make a multi-billion-dollar bet on hydrogen that will launch a new company. And then Equinor in the wind space buying a $2.5 billion stake in Ørsted, the Danish wind giant.
It all just kind of comes together, which is why we knew we wanted to talk to Dr. Ellen Wald. She's president at Transversal Consulting, which focuses on the intersection of energy and geopolitics. Yet nothing going on there. A little sarcasm. She's also senior fellow at the Atlantic Council, author of Saudi Inc., which is all about Aramco and the company's role and huge historical significance in the region. She joins us from Jacksonville, Florida.
Hey, before we get to the latest on energy, certainly related to hurricanes and storms, we have to ask, everything okay ahead of Milton? You're in Jacksonville, which you won't see the worst of it.
I'm actually in South Florida in Boca Raton now.
Okay.
Everything is probably going to be fine here, but there's definitely major concern for the West Coast and also through Orlando and through there. So there's definitely some major concern with this hurricane for most of the state. Just not exactly where I am.
How do you think about, before we get into some of the headlines and obviously the Middle East, but climate change and the impact that could potentially have either on just disrupting the systems, causing systems to go down? I mean, I don't know. How does it factor in to how you think about the energy markets?
So that's an interesting thought. I think the most important things when you think about hurricanes and systems and energy, I think the most important things we've got going on now is that there's a lot more capital concentrated in areas that are hurricane prone now than there used to be.
Yeah,
so when we talk about level of destruction, there's a lot more destruction going on because there's just a lot more in Florida and in areas that are hurricane prone. And so it can be hard to kind of measure and say, well, is this really way more destructive? A lot of we're looking at a lot of things in terms of comparing this hurricane to one that happened in 1921. And so I think it's really hard to say like, oh, yes, climate change has caused this. When you think about energy, it's definitely of concern. Florida gets all of its oil supplies, or almost all of them, via barges that go to Tampa. It doesn't have a lot of ports. It doesn't have a lot of pipelines. And so for the entire state, energy and access to gasoline can be concerning during a hurricane simply because, if a highway is flooded out, then tankers can't necessarily get to certain locations. So it's obviously something, that we need to keep an eye on, even if you aren't in the direct path of a hurricane.
What about when it comes to disruptions at rigs in the Gulf of Mexico, which we have seen during previous hurricane events, during previous tropical storms? Why is the focus on rising oil prices now out of the Middle East and not because of disruption in the U.S.?
So that's interesting. I think it can very much depend on exactly where the hurricane is going. And this hurricane is taking a path, it's going eastward. And I know it's right now it's near the Yucatan Peninsula in Mexico. It may not be heading near a lot of the platforms and the rigs that are concerning, or it may not necessarily be going in that direction. Also, there are now a lot of movable rigs, so things can move. The biggest concern with hurricanes and energy is when it gets towards Houston, towards the ports, because there's just so much energy, not just oil, but also gasoline, imports, exports, natural gas, LNG that goes in that area, that a disruption like a hurricane can actually impact the entire country when it comes to gasoline prices. My suspicion, and I'm not an expert meteorologist, is that this hurricane isn't necessarily going in the path of the oil production in the Gulf, though I'm sure we will hear in the next day or two that some rigs are being evacuated.
Well, and let's layer that on top, because it's really been interesting to watch the energy markets. I think there was concerns about the weakness in China in particular. Also, just other areas of the world like crimping demand, and so there was keeping prices lower. Then of course you layer on top of that, Ellen, the Middle East tensions, and then we've seen oil certainly spike. What is the longer term price? I'm just looking at crude oil right now, $77.20 a barrel. What is kind of the likely price in the next 6 to 12 months in your view? And why?
I think that's very, very hard to say. It's very hard to pin down a number. And it does depend on this confluence. Like you said, you've got, some days the market might be focusing on demand weakness from China. Other days it might be focusing on the potential for supply disruptions in the Middle East, and those can really impact numbers. I do think that the oil market is going to be very, very focused in the coming months on OPEC and whether OPEC decides to go through and to go along with its planned production increases, especially because that's something that is fairly predictable in terms of all of these other things.
Right.
There's no way to predict, is Israel going to launch some kind of attack on Iran? Is that going to impact oil supplies? Is it not? Is Israel not going to do that?
What a mess.
There are a lot of factors here that are unknowable, whereas OPEC is much more knowable, and that may impact oil prices more strongly in the next, say 4 months.
What, in your view, could be a potential target for Israel?
So I think when you look at this area, I do think that there's a benefit for Israel in people, the United States, other countries, Iran, thinking or believing that they will or can attack Iranian oil infrastructure. I think it's highly unlikely. It's very unlikely that Israel would be able to, say, cripple Iran's oil infrastructure or oil industry with, say, one attack or two attacks. They'd really have to launch a highly coordinated attack that is very risky and would probably not be successful because they need to fly through Saudi airspace, for example. Potential target could be the Abadan refinery, which supplies a lot of Iran's gasoline needs itself. And so that could definitely have a devastating effect on Iran. I do think that there will be a lot of pressure on Israel not to do this, but like I said, I don't think that it's likely Israel would do that, but I think Israel does feel that it's beneficial for other countries to think that it might, and it may derive some strategic benefits from that in the long run. So I think the oil market is going to continue to act as though Israel, that there is a heightened risk that Israel would do this.
Hey, Ellen, just about 25 seconds here. One last story. Equinor buying a $2.5 billion stake in the Danish wind giant Ørsted. We continue to see, money being invested in renewables. Does that shift continue despite how much we spend still talking about fossil fuels? And again, just about 25 seconds.
I definitely think we're going to see more investment into renewables. I don't think that that is going to noticeably change the mix and the oil market. Oil is still going to be one of the most important energy fuels in many years to come, though I do think that certain companies could be impacted by the investments that they make in certain types of renewable industries and certain types of renewable power.
Well, great to go on all those headlines that are out there today. Ellen, thank you as always. Dr. Ellen Wald, President of Transversal Consulting, Senior Fellow at the Atlantic Council, joining us there in Florida.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Teri Willliams, meantime, she is the president and COO and an owner of OneUnited Bank. It is the largest Black-owned bank in the country. It was founded back in 1968 during the American Civil Rights Movement. Today is largely digital, though they also have some branches, Tim, in California, Florida, and Massachusetts.
We got Teri with us from Miami. Teri, we've been talking to our Florida guests throughout the show today. We're going to get to the interview, what you're seeing, but of course, we're thinking about you and everybody who's been affected by the recent storms and who could be affected in the near future by the storms. How are you guys doing down there?
So far, so good. It's definitely cloudy, and I actually had plans to leave Miami. I'm in Miami now, but I'm going to stay because of the hurricane and be here, with the troops, as I call them. So I think we'll be fine, but it definitely, category 4 or 5 is definitely nothing to, not be concerned about.
Yeah, sort of. It seems like people who live down there are kind of used to this stuff, but I think at the same time, the frequency and intensity, we're seeing that. Well, okay, let's talk economy, because you've got a great view of the economy as president, COO, and owner of OneUnited Bank. We got that blowout jobs number last week. In your view, how is the economy doing?
Yeah, the economy's doing great, and I hate to even say that sometimes because people look at me sort of strange, like, "What are you talking about?" But really, I remember when interest rates, and maybe you would know, when they were high as 20%, even 12%. Interest rates, even though they're much higher than the 3% that they used to be, still a mortgage rate of 6% is relatively low. Unemployment is, strong. Jobs numbers are strong. Inflation is coming down. This is one of these great economies that, for some reason, and, understandable after what we went through, people aren't completely feeling it yet. But I'm very optimistic about the economy.
Well, so in terms of the outcome come November, how would you guys really tap into the underserved, the underrepresented when it comes to the financial system? It's something that Tim and we talk about a lot at Bloomberg. We obviously cover, in a week where we have earnings in the big banks, they get covered. But there are many people who are left out of the financial system, and that's really where OneUnited and others come into the picture. So having said that, the outcome of the November election, how might that impact your business and your community?
So there are a lot of ways that it can impact our community. But first and foremost is the economy. Beyond the politics, it's really where we see interest rates going, employment going. And our hope is that regardless of who wins, that strength in the economy will continue. But we also are seeing, what I'll call a power shift. I think we're going to talk about our stream that's tomorrow. But there's definitely a power shift. And what we mean by that is that there's a greater sense, particularly in the Black community, of our strength and our resilience and our ability to sort of weather the storms, regardless of the storms. So when you look at, post-pandemic, we've seen some of the largest number of small businesses started in this country, and a lot of them in minority communities. We've seen record unemployment, low rates for the African American community. What we really need to work on is home ownership and making home ownership more affordable. And my hope is, again, regardless of the outcome, of the election that, that the federal government will continue to focus on homeownership.
How do they do that in your view? Because there's this challenge when it comes to, we talked about this last week when it comes to zoning, and actually Tim Walz has talked about this too. The challenge of focusing on home ownership when the supply of homes is low, and trying to encourage home builders to build. But the national government can only do one thing. They can only do so much. Teri, what do you see as the solution here?
Yeah. Well, there's definitely a need for down payment assistance, and there are local programs like here in Miami and California and in Boston, great programs for first-time home buyers. So that's the first thing, because that's where it's mainly felt, is the starter homes, the lack of starter homes. So down payment assistance is huge, and that's one area. But the second is definitely zoning.
Yeah.
In California, they've loosened zoning so that you can build more ADUs or accessory dwelling units, which gives more housing, as well as gives individuals some income possibilities if they have space in their yard for an ADU, or even having family members. In some cases, it's grandparents or students that are living in these ADUs. But there needs to be much more flexibility on housing, and I hate to say this, but less need for parking. Parking takes a
it's like you listened. It's like you listened to our conversation last week.
It's so funny.
I love it.
It's exactly what we talked about with someone who was an expert in terms of zoning and urban planning, but that was a big thing, that the amount of parking spots. I don't know how we get around it, because we don't seem to embrace public transportation as much as we probably need to. We certainly have it here in New York.
Yeah,
but
we spoke to Sarah Brennan, who's an
Yeah.
architect attorney. She's a Cornell University professor. She wrote a new book. It's called Key to the City. It's on our podcast feed. I know that because I sent it to my wife earlier today.
I know one of
Who's
our
an urban
producers,
planner.
Elizabeth, swiped my
She was-
copy
She was
because
gone.
she's into urban planning.
She was gone that day that
Yeah.
we did the interview.
Yeah.
Elizabeth was.
But you're so right, Teri, in terms of that. Like, is it getting any better for communities that we talk about it so much, right? When we finally have decided that wealth creation, it's not about income, it's about wealth creation and generational wealth. And a home is often an entry point in a lot of ways to creating generational wealth. Is it getting any better for underserved communities?
It is getting better slowly.
Yeah.
And again, I'll talk about here in Miami because this is where I am at the moment. But there has been so many condos built that it's starting to become a renter's market. And that also gives the opportunity for some people to focus on home ownership, because the cost of rent has been so high. So there is, and even when we were talking about parking and public transportation, there was actually one of these voter initiatives where the majority of voters said here in Miami that they wanted the government to invest in public transportation. So, I definitely think that, let me put it this way, I think the electorate, the citizens are moving in the right direction. I think it's up to us as leaders, and especially our elected officials, to really move with them and support what we see on the ground as being the need.
Hey, you read reference to this, but you're taking part in a pretty cool event tomorrow night that brings together leaders in finance, politics, diversity. And it comes against the backdrop of a historic presidential election less than a month away. Kamala Harris could be the first woman of color, an Asian American, to be president. First woman also.
Yeah, I mean,
president.
there's
a lot
so
of
many
firsts there.
boxes, right? You can check there.
How are you viewing her candidacy in the context of the national conversation around race, around politics, around representation?
Yeah. So as, owner of a bank, president of a bank, and being a Black woman, if you can't see this, if you're listening, I'm definitely used to people underestimating me and Black women. And I think that what we see now is really a better sense of our strength. We knew it, but now the world is starting to see it and recognize it. And use myself as an example. There are very few owners of banks and very few Black women owners of banks. So when I walk into the room, there's sort of a sense of like, really, is this, do you really own the bank? Or, even can a bank be Black owned, And so there's a lot of questions. But when given the opportunity to share, that we're the first digital, Black digital bank, that we actually have customers all over the country, and that we have a great understanding of the needs of low to moderate income communities. And you don't have to be Black to bank with us. When people start to realize that, because of where we came from middle class roots, because we have an understanding of what it's like to not have a lot of money, we are more in tune with the needs of the majority of Americans, and that using that knowledge to provide better services and better policies, I think people are starting to recognize that this is a good thing that's happening in America.
Yeah, it's absolutely. And, it'll be interesting to see what happens, certainly come November. But you're right, to have this event and just remind people of the voices that are out there. And this event, again, happening tomorrow, correct? Just quickly.
Yes, tomorrow evening at 7 o'clock Eastern time. And it's called The Power Shift. And it's about Black women and politics and economics and really an advocacy and how, we are coming into our own.
Got it.
And power is shifting in a positive way.
Teri, thank you so much. Teri Willliams, she's the president and COO of OneUnited Bank. And this is Bloomberg Businessweek. Teri, thank you.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, we've got about 18 minutes left in today's trading session, getting ready to wrap up the Monday trade. Charlie, walking through all of those numbers, we've seen some broad-based selling, and we're hovering around our lows of the session, so 1% down across the board on those major equity averages. And a big reason why is certainly, we continue to watch the Mideast tensions, but again, to see yields, we talked about this with our Michael McKenzie and Ira Jersey.
Yeah, on Friday, after the jobs numbers came out.
The new narrative, right, when it comes to what we're seeing in rates. And you've got a 4% on the 10-year Treasury. We had 4% earlier on the 2-year. We'll get another inflation print this week, and we'll see whether or not that resets the conversation. But we see a fair amount of volatility. But right now, it's yields higher, and so we're pulling back our expectations for what the Fed does perhaps this year in terms of more cuts.
I want to know what Jamie Battmer has to say about it. He's Chief Investment Officer over at Creative Planning.
I said Jamie Dimon, what he wants to know.
He's tomorrow.
We want to know what he has to say about it too.
Yeah, we'll find out tomorrow.
All the Jamies.
We got Jamie Battmer with us right now. Creative Planning and its affiliates, they've got about $325 billion in assets under management. Jamie joins us from Overland Park, Kansas. Is that the story for you today, Jamie? Is it all about the yield on the 10-year?
Well, Carol and Tim, thanks for having me. Thanks for thinking of Creative Planning. Okay, what's the story today? This kind of market pressure we're seeing? Well, it's a byproduct of stronger than anticipated economic data. Yes, there's always the global concerns, problems in the Middle East, problems with Russia and its neighbors, but unfortunately, it's more often the norm than the exception to have problems in the Middle East and problems with Russia and its neighbors. So to the economic data on that side of what's driving things, it's a byproduct of surprising strength in the underlying markets. The jobs report that came out, stronger than anticipated. The American consumer just stronger than anticipated. So the impact on that is, okay, there might not be as many rate reductions as initially anticipated, but that guessing with rate reductions is as useless as a lot of short-term prognostications. I mean, beginning of this year, Carol and Tim, Wall Street strategists were anticipating 7 to 8 interest rates cuts. We've only gotten 2. And so that's why trying to prognosticate in the short run is not what creative planning does. But again, this is a reaction to actually strong data that hopefully good news will revert to good news over the long run.
Right. As long as that good news doesn't include higher inflation, right?
Yeah, absolutely. Obviously, we have to measure that, but these momentary blips, it's all about the longer trend line, not kind of the week over week, month over month type data. And that trend line continues to be very, very positive. And it's just overall inflation, some things just, yes, our price is still high. Absolutely. In certain segments, suffering. Absolutely. But overall, that trend line over the long run, which is what you can really help drive decision making off of instead of the short run, is still trending positive. And so, yes, as long as inflation doesn't get out of control again, it looks like we're in a good spot.
Every question, every interview, Carol, I have to ask about the election because
go for it.
We are less than a month out.
Where's my app that tells me how many days?
You just less than a month is what we need to just keep in mind. Jamie, are you watching? Are clients asking you about election outcome here? Are they concerned about it? How are you looking at it?
Well, of course they're asking about it because it creates a lot of emotional angst, emotional activity. But as we know, in markets, fear and greed, just like all poor decision-making in life is what drives them, and we need to try and avoid that. But okay, let's step back on what drives all of our investment decision-making here at Creative Planning. It's the historical empirical data and academic research. So in general, the markets are up about 75% of the time, stock markets, right? 3 out of 4 years. It's not always linear like that. 75% of the time, markets go up. Actually, the data supports that in presidential election years, the stock market's up about 84% of the time. So if you just take out all the rhetoric, you'd say, okay, actually, typically speaking, markets like the election years. But then also everything that's going on. Obviously it's emotional, but as I talked about, like with the Middle East, with Russia, these are unfortunate common elements of the world in which we live. I mean, Trump's assassination attempt, 15% of Americans 15% of American presidents have been shot. That's not a rounding error.
It's wild.
I mean, it's, any baby boomer or almost all baby boomers can remember the last time a sitting president refused his party's renomination with Lyndon Johnson in 1968, and the market was up 15% the rest of the year from there. But the key really difference is that, yes, keep calm and carry on, well-trodden subject. But even the underlying data that sometimes people try and trade off of is very, very misleading. The facts don't agree with the rhetoric. And what I mean by that is, like, you can look up any kind of, website right now and say, okay, this sector will be good for a renewed Trump administration, or this sector will be good for Harris administration. The data just doesn't support that. And what I mean by that, just looking over the last couple administrations in 4-year periods, take clean energy as an example. Broke it out during the 8 years of Obama and the 4 years so far of Biden, and then the 4 years of Trump in between. Clean energy did dramatically better under the Trump administration than it did under either Obama or Biden. And you'd assume that to be kind of Democratic friendly sector, but not to say it's not a Republican versus Democrat thing, because the exact opposite could be said of big banks or traditional energy. You say, okay, these are more kind of things that would do well under a Republican administration. No, the data actually says the exact opposite. They did better under Democratic administration versus Republican. And that's a key, that just the rhetoric doesn't sync up with the data. You have to keep calm and carry on, and do not make those emotional decisions based upon the heightened interest that politics brings to the table.
A lot of politics, though, looking at some of the big tech, and I just want to bring in some headlines that are crossing. Earlier today, we did do the story out about how Alphabet must lift restrictions that prevent developers from setting up rival marketplaces that compete with its Google Play Store. That was a ruling from a judge. So upending the search giant's dominance in the lucrative Android app market. This was a federal judge in San Francisco today handing a big victory to Epic Games in its long-running antitrust challenge to Alphabet's App Store. Well, meantime, just a moment ago, Google out, and it plans to appeal this Epic Games verdict and to ask the courts to pause implementing remedies. So to appeal the court injunction in the Epic Games antitrust case. I should point out, this stock's been under pressure for most of the day, but right now it's near its lows, down about 2% here. So in terms of rhetoric, big tech increasingly on regulators' radar. Jamie just got about 30 seconds. Is there a big tech thought for you here?
Well, yeah, big tech is just the hot dot of the moment, just like big oil was 20 years ago, or big steel 20 years before that, or big railroads 100 years ago. So there's always going to be whatever kind of the focus of like the current engine of economic growth, there's going to be that additional regulatory scrutiny. So really, this is just part and parcel for consistency in what's kind of a healthy economic environment where some things are zigging while others are zagging. There's regulatory focus in some sectors versus others over the long run. We see that as a healthy thing, and that innovation usually outpaces regulation. And that's part of markets, always has been, always will be.
Jamie Battmer, Chief Investment Officer over at Creative Planning, joining us from Overland Park, Kansas.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.